Hello and welcome to the Moving Average Ultimate course. In this course, you will learn everything you need to know about moving averages from the basic to the advanced concepts. This is perfect for both beginners and experienced traders who want to gain a deeper understanding of this popular technical analysis tools. I am super excited, my friends. This course is in two parts. The first part is theoretical part, then the second part is the practical part where I will show you how to apply some of these moving averages on your chart. Without wasting much of our time, let's go straight into the business of today. All right, moving average ultimate course for both beginners and experienced traders. For those of us who are new to this channel, my name is Clinton, and of course, you're welcome. Smash the like button right away, subscribe so you never miss an update. All right, guys, this is very essential. Please take your time to read this disclaimer A to Z. It's very important going forward. Okay, also what are we discussing today? Moving average cost outline, right? We'll be starting with the definition of moving averages, type of moving averages, how to calculate moving averages, uses of moving averages crossovers, moving average envelope, moving average convergence, divergence, interpretation of moving averages, and advanced moving average techniques. Of course, trading with moving averages, where we'll go that the practical side of using moving averages. All right, let's get started with definition of moving average. A moving average is a popular technical analysis tool that is used to smooth out price action of an asset and identify its overall direction, that is the trend direction. Moving averages work by calculating the average price, like the name suggests, of an asset over a specified number of periods, right? Typically days or weeks, right? This average then plotted on the chart, providing a clear visual representation of the asset's trend, right? I hope that is clear enough. Of course, then types of moving averages, right? We have basically three types of moving averages. Simple moving averages, right? We have the exponential moving averages, then we have the weighted moving averages, right? The simple moving averages are calculated by taking the average of the asset price over a specified period of time, right? Because you'll get more details shortly. Exponential moving average gives more weight to recent price data and are therefore more sensitive to price changes, right? Okay, then the weighted moving averages, right, assigns a weight to each period, right, with more recent period typically being given a higher weight, right? Then how to calculate moving averages, right? Thankfully, these days, most platforms, very simple to use moving averages, right? Can just click. We'll get to that shortly. So you don't really need to start thinking how you can get these numbers together and make informed decision based on it. So how to calculate moving averages? To calculate a simple moving average, simply add up the prices of an asset over a specified number of periods and divide by the number of periods, right? To calculate an exponential moving average, multiply the previous EMA, that the previous exponential moving average, by a weighted factor, right, determined by you, or the mathematical formula, and add this to the current period's price, right? And of course, to calculate the weighted moving average, multiply each period price by its assigned weight, and then sum these products or assets together. That is the theory behind it, right? But of course, you don't have to put this to heart. Like I said earlier, it's very easy to implement. All right, so let's move forward. Uses of moving averages. What are moving averages used for? One, moving averages can be used in a variety of ways, right? In technical analysis and trading, for example, they can help traders identify trends, right? Identify support and resistance levels, right? Of course, analyze momentum, right? They can also be used in combination of other technical indicators to generate buy and sell signals, right? I hope this is basic enough. Then moving average crossovers. This is very essential, and of course it's a popular kind of implementation of moving average by most traders, right? I would say, right? So moving average crossovers. Moving average crossovers occurs when two moving averages cross each other on a chart, right? A bullish crossover occurs when short-term moving average crosses above a long-term moving average, signaling a potential uptrend. Say, for instance, a 20-day moving average is crossing over a 50-day moving average to the upside, right? And of course, the bearish side, right? A crossover occurs when a short-term moving average crosses below a long-term moving average, signaling, right, a potential downtrend. That is to say, 20-day moving average crossing below, right, a 50-day moving average. So I hope this is clear enough. When we apply this concept on the chart, you have a more understanding. Then we'll look at the moving average envelope. Moving average envelopes are lines plotted a certain percentage away, right, from a moving average, topically above or below a moving average, right? This slide can help traders identify the overbought and oversold condition as well as potential trend reversals, right? I hope this is also, it's very similar to RSI, right? Of course, we'll do a video on RSI in another course. All right, so next we look at a moving average convergence divergence, right? Of what we popularly call the MACD, right? The MACD is a popular technical indicator that is calculated using two exponential moving averages, right? The MACD line, right, is plotted as a difference between two moving averages, while the signal line is a moving average of the MACD line, right? I'll show you on the other part of this video. Please stay patient and know the theoretical part of it is going to help you going forward. If you like the video so far, I will encourage you to smash the like button, subscribe to be part of this amazing community. Thank you so much. Let's continue. So the MACD is used to identify momentum changes and potential trend reversal. So it will be nice if you know how to utilize this tool. Okay, all right, so interpretation of moving averages. How do you interpret moving averages? When interpreting moving averages, traders will consider several factors, right? Including the slope of the moving average, the distance between the moving average and the price action, and the position of the moving average relative to key support and resistance level, right? And of course, traders should also be aware of potential false signals and use moving average in combination of other indicators for more complete analysis more shortly. All right, so now advanced use of moving averages, right? There are several advanced uses that traders can use to further refine the analysis using moving averages, right? That combination of moving average. This technique include multiple moving averages, right? Creating moving average rebounds. You will see that in application shortly, and of course using the whole moving averages. Interesting enough, if I must say. All right, so now trading with moving averages, right? There are things that you need to know. When using moving averages in a trading strategy, traders should consider several important factors, right? That is including the risk management and position sizing. Traders should also be mindful of the potential limitation of moving averages, such as the potential of force and lag, right? Of course, that is one of the popular criticism of the moving average, is a lagging indicator, right? And be aware that moving averages should not be used as a sole basis for trading decision. Instead, they should be used in conjunction with other technical indicators and fundamental analysis to provide a more complete picture of the market. I already mentioned that. So I hope this brief theoretical explanation has given you a basic idea of what moving average is, right? Please smash the like button for me, subscribe so more people will get to see this amazing video. All right, fine. So let's go over to the application of these moving averages so you have a more understanding of how you can use them on the live chart and in your trading. All right, so let's do that right away. All right, so guys, let's apply some of this concept on the chart. Right here on trading view, head over to the indicator session, is right here, right? Then once you click on it, right, you type moving average, comes up, you choose this one, moving average, not moving average, exponential, just moving average, right? You add it, right? Then you can double click on it, right, to bring the settings up, right? Here you can choose either exponential or weighted moving average like we explained earlier, right? And of course, this is where you change the length. Of course, you can also change, should it be calculated based on the open, the high, the low, the close, of course, all some other parameters, but the close is very popular application. For this tutorial, I will be using 20 moving averages, and of course, I will leave the color blue. Of course, what can you see immediately, right? You can see very clearly that this moving average has helped us to identify the trend for some of us who cannot directly see if price is uptrending or downtrending, right? I believe you know what uptrend and downtrend is. When price is making a series of higher highs and higher lows, right? Higher highs and higher lows, that is uptrend. Then when price is making a series of lower low and lower highs, lower low, lower highs, as downtrend. Of course, comment section below, let me know if you understand. Of course, I'm open to correction and suggestion. So right away we can see this is uptrend. Of course, the market just opened right now, right? And of course, this is downtrend right here, right? So this is up, this is down, this is up, right? Now that is application of a simple moving average. If I change it to exponential moving average, what will you notice? Very not really noticeable, right? They kind of similar in calculation, then but when you change the period, it becomes really noticeable. Like if I change it to 50, it will move further away from the price. So the lower the number, the more the moving average will be close to the price as shown, but you will also be getting signals that are very frequent, right? The crossover, I mean, right? So that is if you are using a combination. I am not saying the price crossing over this like this instance. I'm talking about moving average, two moving average crossing over another, right? That is what I am talking about right here. So now this is a single moving average that helps us to identify the trend, right? If we want to know when the crossover happens, we can add another, right? Then change the period to what we want, right? For example, I can do this 50 and decide to say this should be exponential, right? Here you simple exponential weighted, right? I can decide to choose whichever one I want. Now, what can you see almost immediately, right? I think I have to change the color. You can also change the color to your liking, whatever you want, right? And I think why is both of them 50? I think the first one, thought the first one was 20. Oh my goodness, my bad. The first one should be 20, right? All right, got it, right? So the blue is 20, the red is 50, right? I said earlier, short term and long term moving average. The 50 can be considered as a long term in this scenario, right? While the 20 can be considered as a short term. So in our theoretical part, I said when the moving average, the short-term moving average crossover the long-term moving average that is below a downtrend happened here, right? The 20-day moving average crossover the 50-day moving average to the downside, signal a downtrend. And of course, the reverse is the case when the crossover happened here, right? That is the 20-day moving average crossing over the 50-day moving average to the upside, right? Signaling a change of trend. That is it, right? There's really not much to it, right? But of course, like I said in the theoretical part, you need to use this in combination of other tools, right? You need to have more knowledge of price action. But let's say this is all there is, this is all we know, right? We can also make a simple use of it. Let me use the replay tool, right? As you can see, when price was doing all this, you just wait, right? I'm playing right now, I'm stimulating price, right? Then crossover happen. When crossover happens, what does that tell you, right? Of course, a crossover can happen and price continue downward, right? But immediately this crossover happen, you might decide to say, okay, what am I going to do right away? You can decide to, please, this is not an invitation to go take a trade, right? Based off of this, this is the tutorial, educational purpose only. I think I should have the disclaimer right there. Okay, all right. So I'm not a financial advisor, so this is for educational purpose only. Right there, you can take a trade when the crossover happen, or you might wait for a retest. After a crossover, wait for a retest, take a trade. Your stop loss can be anywhere you decide, right? You can decide to take 2 to 1, 2 to 3, 2 to 2 to 1, 3 to 1, 4 to 1, whichever one, right? So we already saw what price did. So let's assume this is a scenario. After the first crossover, the price went down again, then crossover again. Of course, you can wait for a second crossover for a confirmation, right? You can make it your conditional for entry, right? That is left for you to decide to, okay, if the first crossover happened, I'm going to wait for a second crossover for a more confirmation before I trigger a trade. And that is what I just did. I did not wait for the second crossover. We already saw what happened anyway. So this would have been a really nice trade for you if you use this tool strategy, right? The 20 and the 50-day moving averages. If that's all you do and you know when to apply it, you have a condition that you use to know when to apply it to the chart, you can be profitable, right? It's really that simple. All that matters is your time to backtest this and make sure you know all you need to know before you enter a trade. That is, master it, make it your own, right? So that is it, right? Let's quit the stimulation, right? So you can clearly see right now there's no crossover yet. So if I were to be using this strategy, I won't be thinking about taking a trade to the downside because no crossover yet. So this is technically a bullish trend as far as this strategy is concerned, right? I hope this is simple enough. Please guys, smash the like button for me, leave a comment if you are finding this useful, valuable. It will mean a lot to me. So right, so what else do we say we're going to discuss? Of course, you can have moving average rebounds that is having more than one moving averages, and one is telling you this, one can tell you where your stop loss should be, one, you know, where your take profit should be. You can also hold this trade till when you see a crossover before you exit. Let's say for instance you saw this crossover, the first crossover, right? Okay, this is not it, right? This first crossover, you are waiting for the second crossover to decide you intend, and this crossover happen. Of course it's going to lag, but let's say this is the case, right? Let's say this is the case, you take a trade right there when the crossover happen, or wherever the price is when the crossover happen, you take a trade. That's your stop loss. Then you are looking for an exit condition. Your exit condition can just be when price change over again, and the change, like I showed you earlier, the change occurred here, right? So somewhere around there you are looking to exit your trade, and that is 2 to or 2.5, that's to like 2 to 1, right there, right? So that's that. Let's just quickly put a moving average ribbon, right? It's available on trading view. Moving average, I talked about moving average, all right? This is right there. There are kind of different kind of moving averages, right? It's what you decide to do with it that matters, right? I think, let me look for moving average ribbon. Moving average ribbon, right? Moving average ribbon. Moving average, Madrid moving average. What's Madrid moving average ribbon? Oh, there's a lot. Not seen this before. There's a lot of information right here for you guys. You can see a whole bunch of moving averages using to form a trading strategy, right? But if I should technically ask you, please guys, in the comment section below, I want to hear from you. Would you rather use this multiple moving averages or use the previous two? The two strategy I just handed over to you. Of course, it's a popular strategy, right? So I didn't invent anything. So don't go say I said I invented something, right? So just it's funny to me because to me it's confusing, right? I would rather want to see the chart very clearly, and rather than having this whole ribbons. But if please, no offense, there are a lot of people, a guy created, or whoever it is, right? Someone created this, and of course that's a lot of technicality and knowledge, well appreciated. So no offense at all. I'm just saying that for me, I would rather use very simple approach rather than moving average, convergence, divergence, right? It's basically used for it's MACD, right? Let's use moving average, convergence, divergence. Okay, you can use MACD. The MACD is used to check or identify the momentum, right? Because a lot of people use it to spot divergence, right? That this price is doing one thing, the MACD is doing something else, right? Divergence, that is another topic entirely. So let's put back our EMAs, right? Put back our EMAs, that the two EMAs, right? Then one is 20, right? Please, if you want me to do a more video about moving average, let me know in the comment section, right? I can't be doing video that people don't want, right? I need to do video that people want. So if this is what you like, leave a comment, let me know what's up, let me know if I can do, all right, more videos. So right, yeah, you can use the combination of the MACD, right? Because the MACD is moving average, convergence, divergence, right? Combination of moving averages, right? So you can use like a confirmation, right? Let's say for instance, I don't know, let me change this to a more bright color. No, let's do black. All right, so when this crossover happens here, right, what happened in the MACD? Don't know if you can see here, right? What happened? The MACD, there's a crossover, right? That's the first confirmation. Then when it happened again, of course you can see this green, right? When it's red, when the color is red, of course it can be any color at all, but when it's above the zero line, this is the zero line, this is the line, right? I mentioned it in the theory. This is the zero line. When the MACD is below the zero line, that is a sell signal. When it's above the zero line, that's the buy signal. And this when it's green, as the case of my color, right, it's buy. When it's red, is sell. Simple, right? Now when you see crossover in your moving average or two moving average, that is, let me change one of the colors so you know the difference, right? Okay, right there. All right, so now you know the difference. Crossover, right? I think the crossover right there. Okay, whatever, crossover anyway. Crossover here, take a trade, your stop loss here, you are good to go. So when the crossover happens here, you might be looking for a confirmation right there, right? So when it happens, you're looking for the second one. This is your strategy. Then when it happens here, the crossover happens somewhere here, you can take a trade to the upside. So if you have to track momentum, right, as you can see, you can also use it for to count your wave, right? A, B, C, right? Of course, A, B, C, right? Or 1, 2, 3, 4, then 5, right? Of course, you can clearly see this is not this is a moving average. All right, guys, so this is not the technical analysis because it's a moving average. It's about moving average. Let's not go there, okay? So guys, it is what it is. This is basically what I think moving average is. If there is anything you feel is left out, right, please comment section below. I would love to hear from you. I would love to know what you think. Of course, guys, subscribe to this channel, like this video, and share with friends and family. I hope to do another course. Of course, if there is any particular technical analysis you want me to explain, indicator, right, please comment below. See you again. Bye for now.